S&P 500.
It's your boy Jimmy. Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I want to turn on this. Becky quick. While the average man looking at this sad life. She fine as yeah. I'm over here looking at tails and whips like, yeah, 5-6. Yeah, I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing, dog? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang, hey, we some snipers.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. Happy Fed Day. I hope you got your belts buckled. Put your mouthpiece in. Strap in the helmet because things are about to get crazy. My name is Michael Edward, former award-winning hedge fund trader, but now the current head trader at True Trading Group. If you guys still don't know, TTG is the fastest growing, the highest rated, the most highest rated, fastest growing. I'm so hyped about today. We got a couple minutes for the Fed rate decision. Fastest growing platform that's out there for the retail trader and investor. So if you guys are ready to learn trade and profit for real, you've come to the right place. You want to make sure you subscribe to the channel. You want to smash that like button. You want to turn on our notifications. It's Fed Day. We are waiting for the Fed announcement. It is widely expected by market participants that we are going to get a 25 basis point rate hike here in the next couple of minutes. You do have the possibility of a 50 basis point rate hike, but right now the market is pricing in 25 basis points. We're going to be giving you live coverage of the FOMC statement that comes out at 2 o'clock and then live coverage of the meeting, or the press conference that comes on at 2:30. So 2 o'clock, you get the actual statement, you get the rate decision, and then at 2:30, you are then going to be getting the press conference where Jerome Powell is going to speak. That speech is, in my opinion, far more important than the announcement at 2 o'clock itself. Now, Steve Leisman was on CNBC earlier today. Steve Leisman said that he actually does not expect Jerome Powell to address the target Fed funds rate of 5.1%. Now, at the last Fed meeting in December, they moved their Fed funds target from 4.85 up to 5.1. Steve Leisman said today he does not expect Jerome Powell to address that question until March. If that is the case, if he does not bring any mention to the Fed funds target rate. I think the market sees that as a dovish catalyst. So we're going to have to wait and see if Jerome Powell touches upon this. The market has been rallying over the last month. You have financial conditions are at the easiest that they have been since last February. You had 11.01 million job openings this morning. About the JOLTS report is expected to be 10.3. The labor market is still very, very tight. Wage inflation still an issue. Services inflation still an issue, directly pushed by wage inflation. So it's going to be very interesting to see what Jerome Powell does. He's going to have to talk tough. He's going to have to talk extremely hawkish at that press conference to walk this market back. He's going to have to. So if he doesn't talk about the Fed funds target rate, I think the market sees that as dovish, because if he wanted to talk this market back, then I think you just go right ahead and you tell us at that press conference that you plan on moving that rate hike, that you plan on moving your target rate higher, that 5.1 is not where you guys are anchored your expectations. Okay. That is where I want everybody to be focused on, because I think that's the biggest part of this meeting. I don't necessarily think it's as important if you get 25 basis points or 50 basis points. I think it's more about how high are you going to go. It's already widely expected for 25. So we got it. I expect a very hawkish Jerome Powell when he speaks at 2:30. So be careful of an initial move in the markets up, and then Jerome Powell speaks, and then the markets pull themselves back to the downside. There's two different catalysts. One, the actual statement and the rate hike at 2 o'clock, and then 2:30, the press conference from Jerome Powell. For me, the real move, you can trade from that 2 to 2:30 time period. It's going to be volatile as all hell. But at 2:30 to 3 o'clock, when Jerome Powell's speaking, that is when the real move will start to show itself. I'll be live here with you guys all, walking you through the entire announcement and the press conference, what I believe, the words that he's saying. Do I think it's bullish or bearish for the markets? Are we looking long or are we looking short? I'll walk you guys through that. In order to help me do that, I'm going to bring on a couple of very special guests. You guys give a big warm welcome to my business partner and co-founder of True Trading Group, Adam, along with two of our other pro trading moderators, Gio and Jessica.
Hey, how's it going?
What's up, guys? What's up? What's up? What's up? How are you all doing?
Good.
What's up?
So it's good. Listen, we got, it's a little choppy here in the markets. Obviously, it's been a choppy day. Everyone's waiting for the Fed, right? Adam, how long is that clip that you've got of Steve Leisman?
Maybe a minute or two.
Okay, if you want to play it just for a minute, yeah, do you want to play it for, because we got about 4 minutes to go. If you want to play that clip real quick about Steve Leisman talking about he doesn't expect Jerome Powell to address the question.
All right, let me cue that up. And let's go.
The question is not as the job market strong. The question is how much it actually adds to inflation. This notion of the Phillips curve, or the trade-off between unemployment and inflation, it's not working very well. We've had a high GDP and a low unemployment rate, and inflation's been coming down in all of that, Kelly. So it's really the mechanism that Powell sees as the one driving inflation that's in question. And who raised a question about it? Well, Vice Chair Lael Brainerd earlier this month did. She said maybe that doesn't mean that you're going to have wages or the job market soften in order to bring inflation down.
Yeah, and I know you have to go, Steve, but real quickly, we're not going to get any dots or projections this month, are we?
No, it's not till March, and that's been a convenient excuse for Fed officials not to answer my question about whether or not they're rethinking the 5% threshold. They say, talk to me in March.
Fair enough. Steve,
So there you guys have it. So that's from Steve Leisman right there, where Steve Leisman is saying that he's been trying to get it out of the Fed members, but they have not given him an answer on it. He does not expect an answer today. So that's going to be very interesting. If there's no discussion at all about that Fed funds target rate, and all you get is a 25 basis point hike, you probably see upside. And then it will all come down to Jerome Powell and his press conference at 2:30. So this is going to be
we got 3 minutes to go here.
Yep, 3 minutes until we get our rate decision. I'll call it out for you guys. Obviously, it's widely expected to be 25 basis points. I most likely myself will not be trading off of the 2 o'clock number. I'm going to wait for the press conference before I go ahead and start looking at trading activity and looking for a direction, because a lot of times when you have these Fed decisions, you get the first move is oftentimes the wrong move. And every time that Jerome Powell come out with his press conference, he's tried to really, posture up and be very hawkish to kind of pull the market back. So bond market's calling their bluff, guys. Bond market is calling their bluff, right? Yields are nowhere near the Fed funds target rate right now of 5.1. Your 2-year is flirting around 4.2. And if the bond market believed them, that 2-year would be trading around 5, and it's nowhere near it. So we'll have to see what happens with yields and rates following this decision coming up here in just about a minute and about 90 seconds. Let me go ahead and turn on my mic also for inside of. Hold on.
SPY is starting to move.
Yeah.
Yep. All right, guys. So here we go. Here comes our rate decision. We'll be out here in just a couple of seconds. Market's trying to move a little bit higher here, right? A couple of minutes before you're getting some algorithms that are just kind of popping around. But here comes our rate decision. Obviously, the expectation is widely expected to be 25 basis points. Widely expected to be 25.
You guys need to turn off other sources of audio.
I don't have anything on.
Probably Mike.
Yeah, I have my TV on.
No. Somebody has the chat room on.
All right, guys, here we come. So here, first initial move there to the downside right off the alert. And here we go.
I don't have anything on.
25 basis point hike.
What?
Ongoing rate hikes are still appropriate at this time. Inflation has eased somewhat, but still remains elevated.
Mine, bro.
Initial downward move is getting bought up. Move is getting bought up.
Yep.
Inflation has eased somewhat, but still remains elevated.
Let's go.
Initial downward move is getting bought up.
Yeah. That was me.
All right, guys. So yeah, that initial move to the downside. This is nothing. Everything that you're getting right now has been expected. So this is what I'm talking about. You're not really seeing me trade here on this initial release of the 25 basis point hike. I'm really more interested to see what Jerome Powell says at the 2:30 press conference. So that initial move down got bought up. You have a lot of support down there in the low 400s, right? You have a lot of support down there in the low 400s. That's that downtrend resistance line that we've broken above that's been in place all year. You've been consolidating above that area now for the last 5 trading days. Today being the 5th of the trading days where you're above that resistance level, and you really stabilized above that 200 day. So you will get buying down there from a technical standpoint, but what really is going to matter is the press conference at 2:30. So I don't think I'm going to be getting myself into any particular positions ahead of that, because I'm going to be waiting for Jerome Powell's speech. What about you guys, Gio and Jess? Or what are you guys thinking about?
I bought some calls down there.
Ah, nice. The scalper himself. for those of you that, so this is Gio down there in the bottom right. Gio is a scalper. He loves scalping SPY options. So he's the type of trader that likes to get in and out, in and out, in and out, in and out, and just kind of scalp the SPY all day long. Myself and Jessica, who's also on this stream with you guys, we're more traditional day traders where we try to capitalize on longer time frames and on larger size moves. Like my trades will last, several hours. So a little bit of a different type of trading style. But why am I not surprised, Gio? You're grabbing that first move to the downside. That's what I always say. The first move is usually the wrong one.
Little at a time.
They plan on still raising policy to sufficiently restrictive levels. That's a given.
Honestly, that was one of the least volatile moves I've seen in a while from one of these. It really wasn't that crazy.
Yeah, because the 25 was what was expected, and they haven't given you a target opinion here or a dot plot. So it's going to come down to how hawkish is Powell when he comes out with his press conference.
Yeah.
Rate increases will be appropriate. We know all this. There's nothing in this. There's nothing in this statement that initially is out that is a surprise to the market. So far, it's right in line with what it was already priced in. That's why you're not getting a very big move. So you see very low volatility right now as everybody is waiting for Mr. Powell. Some of your stocks that are relatively strong today, like AMD. AMD is one of my favorites in my long term. You look at AMD, and that's having a really good day on the back of earnings. That cleared a major resistance level today around 79 and change, and that stock is continuing to the upside. If Jerome Powell's statement is a dovish one, then I would look for AMD to continue further upside. I would also be looking for NVIDIA to continue further upside. You've got really nice support here around VWAP on NVIDIA. You got really nice support down there on VWAP on AMD. Those could be really good buying areas for those two stocks that are relatively strong today. If Jerome Powell comes out with his press conference at 2:30 and does not say anything that crushes the sentiment right now. Right now, the market is really starting to find its footing and is gaining momentum to the upside. I think Jerome Powell wants to walk that down. I think Jerome Powell wants to cool this market off. Financial conditions are the easiest that they have been since last February.
Wait, I have a question real quick. Sorry. Right here in the actual statement from the Fed, which is dated today, February 1st, 2023, that was just released. It says here, in support of these goals, the committee decided to raise the target range for federal funds rate to 4.5 to 4 3/4. Or no, I'm sorry, 4 3/4. No.
Yeah, that's the current. That's what they raised it to. They raised it. The rates. They just raised it.
25%. Okay. 20, yes. Okay, got it.
And their current target is 5.1. Now, they don't need to give you at the March meeting, they're going to have to give you a new dot plot, which is going to tell you where each member of the Fed thinks they're going to end up. So each member will get a vote on where they think it's going to be. That'll be your dot plot. You'll be able to actually see where each member of the Fed, or how many, you'll see how many of the Fed members think you have to go to 5.1 or 5.35 or 5.6 or 4.85, like you'll see that'll be your dot plot. My thoughts are if Jerome Powell wants to be excessively hawkish today in his press conference, he should address that. He should say, because if you wait until March to give that means now you're looking at another month and a half where this
AMD new high.
Yeah, AMD new highs. That's what you can see another month and a half of this rally continuing if Jerome Powell does not kind of put the lid on it and kind of pour cold water on this flame. I don't think that's what he wants, considering what you're seeing with financial conditions continuously easing. So that's why I'm saying if he wants to cool off the market, he's got to talk about it. If he doesn't, the market's going to take it. In my opinion, market takes it as dovish. Look at that. Markets are right back up to 4 or 5. Nice scoop on the call options, Gio. That first move is usually the wrong one. Look at that. Nice little $3 pop, 402.50 up to 405.50. Possibly just getting started here too, guys. Possibly just getting started. Market's now starting to climb to the upside as we now wait. The rate hike decision, this is interesting. This is also seen as dovish. The rate hike decision was unanimous. This 25 basis point hike was unanimous. So that means every voting member of the Fed thought we should raise by 25 basis points. You did not have people that said, hey, you know what? I think we should have did 50. I think we should have did 75. You don't have that. It was a unanimous decision to raise rates by that 25 basis point hike. And now the NASDAQ has just gone green on the day. The NASDAQ is now at a fresh new high. This is a major level of resistance for the NASDAQ. 296 is a huge level of resistance. If you look at the bottom right of my screen, resistance in January, resistance in December, November, all the way back to September resistance and September support, okay, that you guys have on the Qs. And now you are testing that 296 level now on the NASDAQ.
I want to 405.18. I want to see hold. See if we can get above the close 406.46.
Yeah, yesterday's close at right over 406.5.
Mm-hmm.
NASDAQ leading the way. No surprise there. That's been the strongest area of the market to start off 2023. The Dow is still considerably red. You're nowhere near green. You're nowhere near green on the Dow. The Dow is still down, 250 points. So you're still down 0.8% on the Dow, and it just continues to be the technology names that start moving this market to the upside.
Man, FedEx didn't even skip a beat through all that. Didn't even skip a beat.
Yeah, FedEx announcing that they're reducing their officers and directors staff by around 10%. They're going to be consolidating some of their different teams to save on costs. That news came out at around 11:30 this morning, and that stock is trading considerably to the upside.
Here we go. You got a possible bull flag starting here in a 1 minute.
405.90, 405.92, 86. Yeah, wow, look at that. Gio, I bought calls earlier as well, bro.
Did you?
I did.
Nice. Did you buy to open or buy to close?
Buy to open.
Huh.
Held on new high.
Yeah. Gonna be interesting. You actually have you've seen also, you just saw yields come down. The 10-year now under 3.48. So the 10-year is 3.479 now. So the 10-year is actually, so yields are starting to pull themselves back a little bit. Top gainers in the Dow today, Salesforce.
Meta new high. Tesla new high.
That's all your tech.
Yep. SQ lows.
CRM new high.
NVIDIA.
Yep. CRM.
All your tech.
Affirm.
So far the markets are pleased. We got to see if Jerome Powell continues in about 19 minutes.
I'll be flat by then.
Yeah, good idea.
You know what I don't like? I don't like that there are 2,400 people watching this live right now and only 612 likes. That sucks.
Oh, that does suck, guys. Smash that like button, man. It's
Can
Fed
you guys
Day.
please smash that like button? What are you guys doing?
It is Fed Day, baby. Smash that like button, folks. 2,400 people watching.
Probably the same people who don't put the blinker on when they turn.
Yeah.
It's definitely the same people.
Yeah.
All right, I'm going to do
This is good price action so far.
Microsoft new high.
Balls in your court, Jerome. Balls in your court.
Hopefully that's in his court and not in his mouth later. Let's see what's going to happen today.
Yeah. So your next levels, so you got resistance today up around 406.50. Minor level. Major level 410 on the SPY. You get through 410, your next major level is 420. So I mean, you do have a lot of room here over the next couple of days. And then tomorrow and today after the close, you've got Meta's earnings. Tomorrow after the close, you've got Amazon and Alphabet earnings. And this is going to come down to Jerome Powell's speech, and it's going to come down to Apple, Amazon, and Alphabet earnings. I mean, this is going to be this is very, very low volatility for a Fed rate announcement. It's a 25 basis points. We haven't seen 25 basis points since the beginning of 2022 when they first started going through their rate hike cycle. So it's nice to see we're dropping now to the 25 basis point hikes because 75s are just massive hikes. You actually haven't had 75s before. You've had 50s before, but you got 4 75 basis point hikes in a row.
Yeah.
This
is interesting. CNBC is reporting right now. They're showing this as breaking news that here's what's changed in the new Fed statement. So what's on the screen right now is a comparison of Wednesday's Federal Open Market Committee statement with the one issued after the Fed's previous policymaking meeting on December 4th. Text removed from December statement is in red with a horizontal line through the middle. Text appearing for the first time in the new statement is in red and underlined. Black text appears in both statements. So if we go over here, you can see, what did they say? They said text removed from the December statement is red with a horizontal line through it. Okay. So what they took out from the December statement was the part about reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressure. Now they're saying has eased somewhat, but remains elevated, but took out that entire part about that. What do you make of that?
That's interesting that's the part that they took out because those are parts of inflation that they actually have no control over. The Fed has no control over food or energy prices. So that is interesting that they're removing that. But when you look around, I mean, we were very, very lucky that so far Europe and us have had very, very, very mild winters. And that has really helped bring down the price of natural gas, which was a huge problem in 2022, especially for all of our European friends. There was costing them, more to heat their home than it was to actually pay their rent or their mortgage. It was like 10 times the amount in Europe than it was here. And you've seen natural gas prices have absolutely gotten clobbered. I mean, they're just getting destroyed. You're at the lowest levels in natural gas prices that you've seen in the last couple of years. And also, oil prices have also come down. Oil prices have come down. So energy has come down. You still do have pockets of food prices that are still elevated. Obviously, everybody knows that eggs are expensive as hell right now. But it's nice to see them remove that. I'm surprised that they did, but it's nice to see that they removed it.
So then it goes further on to say Russia's war against Ukraine is causing tremendous human and economic hardship. They took out the war and related events and just put economic hardship is contributing to elevated global uncertainty as opposed to, I don't know where all that noise is coming from, but it's got to stop.
That's me.
Upward pressure on inflation are weighing on. But somebody just pointed out something that is pretty interesting right here. Mike, you see this line right here? It says, in determining, do you see it says the pace from December?
Mm-hmm.
And now they're saying the extent. Upward pressure on inflation weighing on. But somebody just pointed out something.
So that tells me that they're now committed to 25 basis point hikes going forward. And whatever.
Why does that tell you that?
So because if they removed the word pace versus the word extent, the word pace is all about how fast you're raising rates. The extent is how far you raise rates. So that tells me that the Fed is committed to, even if they continue raising rates, it will be at 25 basis point clips. You're not going to get another 50 or another 75. So the pace of their rate hike is now 25s at a time. The extent of their rate hike, which is how far do they go, is what is now the question mark. So do you get one more 25, two more 25s, three more 25s? Either way, the pace would be the same, but the extent would be different.
Got it. They also go on to say here that in addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities as described in, now what was said in December was as described in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in May. Now it just says its previously announced plans. I think that doesn't really tell us anything.
Yeah, that's this. They're just saying the same. They're just referencing the prior statement. It's the same.
Yep. And then here, I mean, this really doesn't come as that big of a surprise, but it says the committee's assessment will take into account a wide range of information, including readings on they now are not citing public health as something that they're taking into consideration here.
Yeah, I feel like that they could have.
Yeah, exactly. But what does this mean? Where they have voting for the monetary policy action were Jerome H. Powell. Oh, this just shows
who voted.
Who voted? Got it.
Not every member of the Fed is a voting member.
Got it. Well, no, there's some members that are different now. So
yes. Yeah.
Okay.
Yeah.
And that's it. These are the things that were different. So
yeah, not a lot of changes. Like very, very, very little.
Yeah.
Like I see as we went through these, very little.
This is probably the most interesting part.
Yeah.
Where they are not citing specifically supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. Maybe that's because broader price pressures is easing with inflation. China reopening reflects less of a supply and demand imbalance based on the pandemic. And, with the exception of eggs, which I may have to, auction a kid off for later. They're so expensive. Food and energy are starting to decline a bit.
Yeah. I can't cut back on my eggs either, man. I love eggs, and I have to get the free range. I get all like the craziest of the egg types. I need like that real orange yolk. You guys know that the more orange the yolk, the healthier the egg, the healthier the chicken. The more yellow the yolk, the less healthy the chicken, and the less healthy the egg. Nutritional fact. Who says we're only about trading? Nutrition lessons also here on the True Trading Group live stream.
I buy our eggs from like an Amish farmer, like a local person around here.
That's awesome.
And and the other day my daughter was like, I'm done with breakfast, and went to go throw away her whole pile of scrambled eggs. And I was like, no, I'll eat them. They're too expensive to throw away.
Well, I have a quick question here. It says here the committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. What they are talking about here is an increase in the basis points, not the Fed's fund target rate, correct?
Correct. Yeah, I know it's confusing because the word target is in there, but that statement is about. So right now, the Fed funds rate after this rate hike is now 4.5 to 4.75. That's the new Fed funds range. All right. Their target for their Fed funds target is the 5.1, which is where, and they told you that at the December meeting. They said that we're moving our target to 5.1. Right now, it's 4.5 to 4.75. That's the range that they're at right now.
Got it. All right. Let's go back to a chart. Let's see what we're looking at. Mike, is that a bull flag right there?
I just think that it's just, the algorithms reacting to the statement, and, the market is right where it was prior to the statement. I mean, literally, the SPY is maybe 20 cents higher than where it was before the statement was released. Basically a non-event there. So it's really going to be up to Jerome Powell and the speech that he gives at 2:30. So I just think the market has just digested the statement. The algorithms reacted to it. And then now, human elements of trading are now just waiting for Jerome Powell. As our algorithms. Algorithms will listen to his words as well.
We got 9 minutes to go before Jerome Powell takes the stage and gives his speech for the press conference for today's Fed meeting. And we're halfway there, man. We had said last night on the live stream that if we didn't get an increase in the Fed's funds rate, which now it may look like not that we're not going to get an increase this quarter, but that it may be postponed till March, and 25 basis points, that this market could really move a lot higher.
Yeah. If you don't get Jackson Hole Jerome Powell, then I think the market goes higher. If you don't get Jackson Hole Jerome Powell. Now, for those who don't know what that means, Jackson Hole is basically it's a stage where members of the Fed are able to discuss monetary policy. It's like one of the most highly anticipated conference events that you will get.
Mike,
it was
giving you an update. 6 minutes.
What?
We have 6 minutes. Go ahead.
Yeah, I know.
Right,
so at that conference, Jerome Powell gave an 8-minute speech, the shortest speech that he's ever given. One of the shortest speeches that a Fed chairman has ever given at the Jackson Hole conference. And it was the most hawkish, tough, angry, that I've ever seen Jerome Powell speak. And that is what changed the entire market sentiment last year. And that's what started the market crash in late August and then September, October. That's where that's literally is where that crash started. So now even though the Fed has raised rates considerably higher from that moment, financial conditions are easier now than they were at that time. And if Jerome Powell doesn't like that, he's going to have to, again, be extremely hawkish in order to tighten up those financial conditions and have the market start to move in the direction that he wants. Now, when I say market, I'm not talking about stocks. I'm talking about interest rates. I mean, you look at the bond market and you look at yields, because he has no control over the bond market right now. He's telling you we're going to 5.1, but the yields are not moving anywhere near that. So if he's not overly hawkish like that, and he insinuates that, hey, we gave you 25, we're probably going to give you maybe another couple 25s, but things look good, and I think maybe 5.1 target is a pretty good number. We feel comfortable, and then we'll wait and see. That's what you get, then this market could move higher, considerably higher, and this rally could continue, and then it'll just be up to what could break that rally would be Apple, Amazon, and Alphabet earnings tomorrow could possibly break that. But
how much impact do you think Meta earnings have, or any of the earnings that are taking?
Meta's earnings are important. Meta's earnings are important because it'll show you kind of that digital advertising, type of spend, and that can hurt other areas of tech. And tech's the biggest component of the S&P, so that is important. But when you look at pure weighting on the markets, obviously Apple, Alphabet, they're bigger. So I think they're more important. And I actually think that you probably get a little bit of a disappointing guide out of some of those names. That's what I think going into this, but we'll have to wait and see, folks. This is one hell of a time to be a trader in this market. It's just unbelievable. I'm just blessed to wake up every day and to do this. It's just unbelievable. Here we go. We're starting up here in a couple of minutes, guys. We're waiting for Mr. Jerome Powell to take the podium.
I'll turn off the elevator music.
Yeah, turn off the elevator music while we wait. This is amazing. When's the last time that you guys have seen the market just sit here like this after a rate decision?
It's been a while.
It's crazy.
It's been
It's
a
crazy.
while. I gotta tell you though, if this market likes what Powell says and moves higher, there's lots of stuff from a technical standpoint. Then I'm like, yeah, we're going long.
Oh yeah.
We're going long.
Oh yeah. I thought there's you got honestly like Nvidia, AMD, Salesforce. Like Snowflake. If Snowflake gets through 160, that's got room. Salesforce, that thing looks like that's got room up into the mid to high 170s. You take a look at AMD with the big break today. AMD has a gap to fill up there around 85. It's like Nvidia. There's room here. There really is room here for this tech rally to continue. You can see Tesla. You can see Tesla back up to that 100-day moving average and start to knock on the door of like 196, 197. You got a lot of stuff out there that looks pretty good.
And on the daily, really get moving. On the daily on Tesla too, we're breaking out of that bull flag. So from a
I'm looking at Coinbase too. Coinbase, nice break out of that bull flag. It's got a big resistance level at 61. You clear 61, it's a straight shot to the 65 200 day. That's an easy $4 move. So this is gonna be interesting.
Mikey, I'm gonna try something here.
I'm also looking at AI also, guys. AI was our huge winner from yesterday, 125% gain for members on the call options. If you guys caught the live stream yesterday, but that looks pretty good if you get through 21.25. All right. Markets are just waiting. We are just sitting here. Oh, that looked good, Adam.
You like that? I got a thing of the SPY and then.
Yeah, I do, Adam. I do like that. That looks good. All right, here we go, guys.
Hang on.
The full effects of our rapid tightening have yet to be felt.
Okay.
Economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of
Labor market's
easing,
still out of balance.
the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country.
All right, guys, he's not hawkish right now. I don't see a hawkish tone out of him. I don't see a hawkish stance. I don't see a hawkish attitude out of him. I mean, that is a pretty easy Jerome Powell. That is not Jackson Hole Jerome Powell. Let's see now as he's starting to take some questions.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel. Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services.
Guys, you are getting new highs on the market now. The
So
market just went green on the day. We are now above yesterday's close.
In
As Jerome
the
Powell
housing services
is
sector,
taking some questions now, but
we
he is
expect
not
inflation to continue
hawkish.
moving up.
I have not seen any hawkish comments
for a
from
while,
him
but
here
then
yet,
to come
and
down,
that is
so
what has
we make
taken
new
this
leases
market here to
continue
the
to go up.
upside now. I'm
So
looking
in those
over at
two
AMD,
sectors, you've got a good
NVIDIA,
story.
looking at the SPY here. Your next
The issue
resistance
is
level
that
on the
we have a
SPY
large sector
is just
called
above us here
non-housing
around
service, core non-housing
408,
services,
and
where
then
we
you're
don't see
talking about that
disinflation yet.
410 level. It is
But
possible
I
we
would
could
say
see that
that,
level today.
So far, what we see
Have to
is
kind of just
is
keep
progress,
gauging
but
Jerome
without-
Powell's
without any
responses to
weakening
some of
of
these
labor
questions.
conditions.
Has your
Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway.
He just said he will
and we
update the
continue to get
forecast
strong
for that
labor
target
market
rate in
data.
March. He's not going to talk about it
so
now. He
But,
said
you know,
it is
we'll update those
gratifying
forecasts in March.
to see the deflationary process of watching inflation come down while the labor market is still strong.
Chair Powell,
And said we will talk about the target rate in March. He's not going to talk about it now. You just heard that from him. That's why the markets are moving higher, guys. This is what we discussed about earlier before the announcement actually came out. And now you are moving here to the upside. New highs now on the markets across the board. We are now green on the SPY. You are now obviously new highs on the NASDAQ. NASDAQ is breaking through a major level of resistance. You are still red on the Dow, but the Dow is regaining steam. Now down only 125, was down well over 300 earlier today, but now you are now well in the green on the SPY. Good volume coming in here, guys. You're going to be coming up to a big level of resistance up there around 410.
But still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Colby and then Howard.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be. And that's obviously back in December. And the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think, we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data
that's pretty big.
We'll make data.
That's pretty big right there, guys. That comment from Jerome Powell. He was just asked again very specifically by this woman right here about him wanting to. Is the 5.1 estimate that was given at the December meeting, is that still the best case for us to use, the best guideline? And he said, listen, we're going to be data dependent. He goes, moving to 25% allows us to reassess the data as it unfolds. He goes, we have a lot of data that's coming out in between now and the March 22nd meeting. So you're going to have a month and a half more of economic data, inflation data, jobs data, CPI, PPI, you're going to get a lot more information, housing data that's going to come out in between now and then. He said we are committed that more interest rate hikes are appropriate, but that's already a given, because even if they get to the 5.1, that means you still need to raise rates 2 more times. But the fact that he said, as I mentioned, it's gratifying what we have seen. We're going to be data dependent. We're going to wait and see what the data tells us in February, what the data tells us in March. These are not hawkish statements that are coming from Jerome Powell. Matter quite the opposite. So that's why the markets are moving to the upside. He is not being hawkish right now. He's kind of, for the first time, it sounds like he's acknowledging that inflation is cooperating while the labor market remains strong. He has not committed to, like I said, he has not committed to wait to answering that question about moving the Fed funds target higher. So that's what's giving this market a bit of a boost. That's a fantastic question by that reporter. We'll see what the rest of these questions hold for us.
To think that we've really got this. We need to see, our goal, of course, is to bring inflation down. And how do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would
that's
say
a
it this
big
way.
statement. He just said,
say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far.
That is a comment that he just
goods
said.
Prices is a big sector. This is what we thought would happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down.
Also, guys, if you took that on-trade idea I gave in
continue to
chat
be
earlier,
soft.
you're now going to look
And
for
we do assume
all-time
that.
high
So we think that that's sort of in the
77.25. Look
pipeline.
for
And we actually
ON
see
to break
disinflation
all-time high and
in
make a
the
new
goods
high
sector,
on
and we see it in the
ON.
pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, that this is good. We expect to see.
Guys, based on what I'm seeing,
that
I'm staying
disinflation
long-minded
process will be
now for the
seen,
next week.
we hope soon,
I'm going to try to stay
in the
long-minded
core
now for the
goods,
next week. If we can get through 410 here,
the core
then
services
you got,
ex-housing
and then
sector
it's
that I
the only
talked
thing
about.
that would make
We
me
don't see
switch
that.
my
It's,
stance to
it's
say, hey, I want
7
to
or
be
8
bearish and I want to look for
different kinds of
shorts,
services
is if
that
Apple,
model that are
Amazon,
the
and
same.
Alphabet
And, you know,
just
we have a
completely
sense of
bomb
what's
on their
going on in
earnings
each of those
guidance.
different,
But from what I'm seeing right now,
subsections,
if we get through 410
probably
today,
the biggest
and
part of it,
Apple,
60%
Amazon,
of that
and
is,
Alphabet do not
you know,
bomb on
research would
guidance,
show is sensitive to slack in the
all right,
economy, and so
then
the labor market will probably be important.
I think the SPY, you're looking at probably a move that takes you to 420. 420 is the next big level of resistance on the SPY if you get through 410. So huge level we're coming up on here, guys.
Which is the thing that we think
Mike,
is the best
NVIDIA's at
predictor
208.
of headline PCE, which is our mandate. So it's not that we're not.
I'm sorry, what was that, Jess?
NVIDIA is at 208.25.
Yep, NVIDIA and everything is ripping here to the upside now, guys, as we're pushing 410 now on the SPY.
Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent, we'll see more persistent inflation in that sector, which will take longer to get down. And we're just going to have to.
And he said specifically, by many indicators, the job market is still very strong. So the fact that he's acknowledging inflation coming down while the labor market is still very strong,
Wall Street Journal.
that goes into the soft landing bucket. That comment would go into the soft landing
without above target inflation. And we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it, is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Victoria. Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, would we say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, you're asking about prioritization in effect, is what
yes,
you're, okay.
Yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between, it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions, so we're the fiscal agent.
Gina and then Steve.
Gina Smilik from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So the committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're going to write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may have been responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and So sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor.
Okay, so but you're finding some resistance up here at this 410 level on the SPY. You're getting a little bit of a decrease in volume. I'm just trying to pull back there a little bit. That's a big technical level of resistance. Intraday support is 408 and 406.25 are going to be your intraday support levels on the SPY for potential pullbacks with about an hour of trading to go. Really trying to see if we can get through this 410 level on the SPY and then solidify a bullish stance for the next couple of days, as long as you do not get a disappointing earnings guidance from Apple, Amazon, and Alphabet tomorrow. They're going to be tomorrow after the close. Those companies report. Meta is today after the close.
Can soften. And so far, we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get there with 5%?
Certainly possible. Yeah, absolutely, it's possible. It's a question no one really knows. I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023. And the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view, or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline. both private and public. And so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year. And that's my base case is that there will be positive growth this year.
Rich?
Thank you. Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good. Second off, I think earlier on in the press conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Waller suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence
So
metric?
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. Market participants have a very different job, and it's a fine job. It's a great job. In fact, I did that job for years, but in one form or another. But we have to deliver that, and so we are strongly resolved that we will complete this task because we think it has benefits that will support economic activity and benefit the public for many, many years.
Edward.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come, to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast.
All right, guys, this is...
It may take longer to come down. And, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, sending signals that...
So, guys, this is a very, very, very different Jerome Powell than what you have seen over the last several months. Over the last several months, you have seen an excessively hawkish Jerome Powell, and today you really are getting more of version 2021 Jerome Powell, where he's very much more nonchalant about inflation. Remember when it was like, oh, inflation's transitory, we're not worried about it. You are really getting a very lax Jerome Powell right now. He is not scolding the market. He's not yelling at the market for not believing what they're going to do like he has been doing for the last several months. He is coming out and really acknowledging that inflation is cooperating. And one of the things that just gave the market a little bit of a boost is that Jerome Powell is now talking about the rosy picture of, hey, well, this is a very unique situation. This inflation is very, very different than any other prior business cycle in history. You know, he's like, you've never seen before, ever, where you had a global pandemic, where you shut down the entire economy, injected trillions and trillions of dollars of stimulus into the economy and into markets. And then that created such a massive imbalance between supply and demand and supply chain disruptions and really goods inflation. And now he's saying, like, you're seeing that come down without seeing, you know, a spike in unemployment. The labor market is still holding up. He has reiterated that our rate hikes, the full effect of our rate hikes, have not yet been felt. But just the fact that he's bringing in and making a point that this is a very different situation from other prior business cycles. He actually said it's not like you can go back throughout history and say, well, let's look back at the last 10 times that we shut down the economy, you know, and there was a global pandemic and the whole world shut down and there were trillions of dollars of stimulus. He's like, we can't go back and ever look at how that whole situation panned out. This is the first time for everyone. And he even made comments in his speech about how, you know, nobody really knows how inflation is going to act, how all of this is going to take place, because it's never happened before. So he's like, this is the first time for us. This is the first time for all market participants and all economists around the world to be able to deal with this inflation problem that we have. But he used words like, it's gratifying to see that the deflationary process has begun. He has said, we can say for the first time that the deflationary process has begun. These are not, it's a little bit of a victory lap. It's a little bit of a, hey, I told you I got this. Now you're seeing, I got this. Everybody relax. I told you I got it under control. Have a little bit more faith in me. That's the type of tone that you're getting from Jerome Powell. You're not getting, what's wrong with you people? I'm telling you I'm raising rates. You're not listening. I'm nowhere near done. Inflation's a huge problem. I've got to get it under control. Like, that's not the tone that you're getting from Jerome Powell. That is the tone you got for the last 6 months. It's not the tone of Jerome Powell here today, and this is why the market is rallying, ripping face right now. We are now pushing up to 412, trying to really get through that 410 resistance. You just broke through 410. Let's see if you can extend away from 410 and firmly close above it. Then you've got Meta earnings after the close. And then tomorrow, you would look then for Apple, Amazon, and Alphabet earnings after the bell. And once you get past that, if you do not have an Apple, Amazon, Alphabet disaster, if you do not get a massive guide lower from those companies, you will be looking at a continued move to the upside in this market. This rally can still take you higher. You are at an all-time high on cash positioning, an all-time high on cash positioning. If Jerome Powell opens up the door and gives everybody the green light, there is trillions of dollars. I think it's like $4.6 trillion of cash that is still on the sidelines because everybody was positioned so defensively coming into 2023. If Jerome Powell gives you the green light, if Apple, Amazon, and Alphabet give you the green light, my next target for this buy will be 420. And I'll be long-minded. I'll be trading long. I'll be looking to buy pullbacks over the next week to 2 weeks to get up to 420. I'll be looking to buy those strong stocks like AMD and NVIDIA ripping face today. There's a lot of different names out there that are trading really well. But I am, you know, Jerome Powell had a chance today to be hawkish. He's very purposely not. Seems like it's a little bit more of a victory lap today. You know, a very welcoming speech from the bulls, people that are bullish the market, very welcoming speech from him. Even when he's talking about and answering people's questions, he was pressed on a couple of hard points and he stuck to his guns and he did not, you know, he stuck to his guns and he has not shifted that tone to be a little bit more hawkish. He's probably going to take a couple more questions, but so far a very dovish Jerome Powell.
Of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Greg.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way. It's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Let's go to Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
All right, folks. Well, that's it. Jerome Powell is done. And the hawkish Jerome Powell that people were looking for, you did not get it. Market trade to the upside, but you are now flirting with this 410 level on the SPY. This 410 level is huge. I'll take you guys to a full screen, full-size chart. And, we've been talking about this 410 level for quite a while. You guys caught my live stream yesterday. We went over this 410 level as saying if Jerome Powell does not give you that hawkish stance, you look for the markets to get to 410. You got to 410. You push above it all the way up to 411.80. But you are going to want to see, you have 45 minutes of trading action left. I'll tell you what if you're long, what you do not want to see is a pullback to you do not want to see this market in the next 45 minutes go back down to here. If you, in the next 45 minutes, drop back down to, let's say, 407, in that area, all that's going to leave you with today on the daily chart is a failed break of a massive resistance level. And then you'll have to rely on the earnings numbers to either get you above that number or below it. So if you don't get above it today, I don't think you get above it until you get Apple, Amazon, and Alphabet that are going to come out, and then we'll give you your earnings. The next 45 minutes of trading is going to be very, very important for the sentiment going into the next day, right? So you still have a lot of catalysts to come here. This is a very unique week. It's not just about yes, the Fed obviously is a massive catalyst, right? But there's still so many other catalysts to come with earnings. And right now you got Jerome Powell gave you, hey, I'm not as hawkish, I'm dovish. The market's rallied on that, but now you're at a major resistance level. And right now, I still don't consider this level broken. You're still flirting inside of this level. That initial volatility of the Fed meeting and the press conference took you through 410. Now you're back at 409.80. So very quickly, as soon as Jerome Powell stops talking, you dropped right back underneath 410, showing you that resistance level is still intact. In order for me to feel good that this level is broken, I would need to see an extension and a close at 412, 413. If we close 412, 413, I would say then that 410 level is now broken, and then you can look for that next move being to 420. But watch these next 45 minutes of trading before we close out the day. Very, very important from a technical standpoint. You got the check mark for the fundamentals. Check mark for the fundamentals was 25 basis points and a less hawkish Fed. Well, you got that green check mark. So the fundamental side, okay, that's we got what we wanted. Now the technical side, you want to see an extension away from 410 and a close definitively above it in order to give you the check mark on the technicals. And when you've got situations in the market where the technicals and the fundamentals line up together, my friends, that is when you find yourselves in the highest probability setups that you can possibly find as traders. And that's what we're going to be looking for here in the next 45 minutes of trading. You guys, I would also we got a trial membership going on right now, guys, also, where we're actually going to be giving away a free annual membership to True Trading Group tomorrow at noon. So if you have anyone that's watching this live stream right now and you guys are not members of the TTG platform, if you guys want a shot at a free membership and you want to trade through earnings with us, you can join our trial membership by going to ttgthree.com. That's TTG3 spelled out.com. You'll enter your name, your email, your phone number. Click yes, I want this. And you're prompted to fill out an application. If accepted, you'll then pay $3. We charge $3 just to make sure that you guys are real people. Okay? Just want to make sure that you guys are real people. We maintain a very high quality and very high integrity chat room. You know, we have a lot of thousands of traders that are in there during the day that are trading, trying to make money. And I don't want anyone going in there that's going to just start spamming our chat. So it's a one-time payment of $3. There's no automatic renewal. There's no reoccurring payment, no funny business. It's just a one-time payment of $3, and you get 7 trading days. So the weekends do not count against your trading days or against your trial. It's 7 trading days. So tomorrow at noon, Adam, my business partner and co-founder, is going to be giving away 2 free annual memberships to True Trading Group to 2 lucky trial members. So if you have ever been interested about joining the True Trading Group platform, you can go to TTG3 spelled out.com now, join that trial, and then tomorrow at noon, you have a shot at a free annual membership to True Trading Group. It was supposed to be today, but Adam didn't have to. We were working on a bunch of other things. Adam didn't have time to do it today. We were unable to do it because everything was so busy with the Fed meeting today. So we were supposed to do one today. Instead, we're going to do 2 of them now tomorrow. All right. So tomorrow we're giving away 2 free annual memberships to True Trading Group to 2 lucky trial members. You just have to go to TTG3 spelled out. That's TTGTHREE.com to join that 7-day trial and have a shot at a free membership.
Yeah, I was going to say, I would like to see us close over 412 from a technical standpoint. I want to see us close over that 412. If we drop back down to like 408, 407, that is going to look gross on a lot of daily charts. That will not look good from a technical standpoint. So I would like to see us close up there. And if we do, I mean, I'm already raring up for some longs. So also I wanted to say during Powell speaking, congratulations to the True Trading Group fam who capitalized on the ON trade because it did exactly what I said when the bell opened and made a new all-time high. So there is that analysis on. And at this point, you pull out your fibs to get your targets for take profits. So that made new highs. And then also I shared an idea on A, B, and B, the break of the bull flag on the daily. And you did get that move. So your resistance levels would be 114, 116. Those would be the levels I would look for. If you get through 114, it should be a clear shot to 116. So
that's a nice that on semiconductor. That's a really nice stock too, guys. And honestly, this is a stock. if you guys joined us for Trader Palooza was, Trader Palooza was just this past weekend, and one of the workshops that I covered was about volatility. And when you're looking at, like, if I traded a stock like NVIDIA, right? NVIDIA is going to be a higher level of volatility. And in that workshop, we talked about identifying other levels, or identifying other stocks with lower levels of volatility so that you guys can stay within your range. And on semiconductors is another one that's going to be like that medium level of volatility, that if you're not comfortable trading like an ASML, you're not comfortable trading in NVIDIA, or some of those higher volatility semiconductors, on is a great one you guys can look at. That's a lower level of volatility, but obviously still gives you some really nice moves. Right?
And honestly, through that whole time that the semiconductors were pulling back, on was one of your stronger semiconductors. So it showed relative strength, while NVIDIA and AMD were pulling back and into crazy levels. I never dreamed I would be able to buy them in my long term, but I did. So, on was one of those ones that never got into my levels to add to long term. It was one of the stronger names. So I'm not surprised that it's making a new all-time high with the SPY over 410.
Yeah, a hell of a move. There you can see the SPY, guys. We're just kind of sitting here now at this 410 level, trying to hold it. You can see, like, we popped our head above it, right? And now you can see, look, now you're trying to hold it as support. So you have this resistance here. Now you're trying to hold it. You're trying to hold it.
Hey, Mike, what time does the Fed, not the Fed, what time does Meta release their earnings today?
A couple minutes after the close.
Okay, why don't we do this? Why don't we go back into chat? Let's close up the live stream. All right. We also have an important meeting we have to have with our members right after the close. So why don't we do that? If you want to trade with us for the rest of the day, there's plenty of time left. Sign up for the trial. It's $3. You pay a one-time payment of $3. You are literally never charged again. And you come trade with us for the rest of today and for 7 trading days thereafter. All right. Weekends and holidays do not count. And it's my fault. I was supposed to give away one free trial membership or one free annual membership today. I'm not able to because we decided to do this. Live stream for the Fed meeting. But I would like to, our members were super patient. I would like to go back. I would like everyone to go back into chat and round out the day in chat with them now that we've done our streaming.
Awesome. Congrats also members that jumped on with Geo on the 404, 405, 407 calls for today expiration. Congrats members on that one. They were able to go after the SPY option scalps with Geo. Yes, Geo still is not having microphone access.
All right, cool. So let's go back into chat. All right.
Yeah. All right, guys.
Go ahead.
No, I was going to tell you guys, we're going to head back over to chat. You guys can join our trial. You can head into chat with us. We're going to go back into the chat room now on the TGG platform with all of our members for the last 30 minutes, talk about this a bit more and see how the markets close out the day, and then talk about where our focus is going to be then for tomorrow. And then obviously with Meta after the bell with earnings. We'll do that live inside of chat as well. For all my members, we'll cover that with you guys directly inside chat. So if you want to join our trial, go to ttgree.com. That's ttg3spout.com. It's a one-time payment of $3, guys. There's no reoccurring payment. There's no automatic renewal. None of that. It's a one-time payment of $3. You guys can join us for a full 7 trading days. And you'll have a chance tomorrow. We're giving away 2 free annual memberships. All right. So join the trial. Good luck tomorrow for a chance at a free membership. And I'll see you guys all back in chat. If you haven't done so already, subscribe to the channel. Smash that like button. Turn on your notifications. You guys never want to miss out on these lives. We do these lives 6 days a week. We're heading back over into chat. My teaching members, we also have an important family meeting after the close, and we'll go over Meta earnings as well. I'll see you guys back over in the chat. Thanks for joining me, guys. I'll see you all.